This is Nifty Culture. I'm Pio, and this morning I have the pleasure of speaking with Michael Tant. How's it going, Michael?
It is going great, Pio. It is a nice I guess Wednesday morning for me, and so I'm working on my coffee already. But very much excited to be a guest on the show today. Great to talk with you. It was great to chat with you when we were on the Twitter Spaces the other day, and really appreciated you reaching out and connecting. So very much looking forward to hanging out with you and talking about all the stuff that I love and spend so much time on.
Absolutely, man. I'm excited too to give people some context. You and I connected because we've shared the stage in the Monday morning spaces that Beanie has been running for the past few weeks. I was really impressed with a lot of your thoughts on fractionalization, your thoughts on utility for NFTs in video games. And you've been in this space for a while, and I think it's pretty apparent when people hear you speak. Can you give people some context and give them an idea of like your professional background and
Yeah.
how long you've been in the space, what brought you to the space, and what's coming next?
Yeah, absolutely. Yeah, so it's been. I think everyone's journey in the crypto space is definitely unique, but all of the stories are weird. Like they're all very interesting. They all have some weird coincidences and some weird like, oh, I met this person and met this person, and it's a very small space. I got started. Well, so I guess I should go back even further. I first heard about Bitcoin back in 2011, late 2011. Um, and I mean, this is shameful of me, but I had a friend of mine, wasn't a super close friend, but did a presentation at a discussion group that I went to. And I was big into economics and I was big into finance, sort of from like a political science perspective. Was studying it, was big in studying history and humanities. And so I went to this discussion group, and this guy did like an hour and a half long presentation all about Bitcoin and this sort of decentralized money and pitching it as sort of like a libertarian, maybe super free market, anarchist sort of type of money, right? Where like the government couldn't dilute it, the government couldn't print more of it. There's a hard supply. This is the emission schedule, and it's totally decentralized, right? So it's validated by all these different people across the entire world, and there's this like consensus mechanism around it. And I thought it was really interesting. Obviously there was some price movement back whenever it was happening, and it was like, I don't know, $50 or $100. And at that point in my life, I didn't really have capital to invest in anything, and I was more focused on my schoolwork and other life things. But I thought Bitcoin was very interesting. I just wasn't in a place where I could really do any investing. So fast forward to 2016, I had sort of kind of kept track of what Bitcoin was doing based on its Bitcoin price, and there was some stuff with the Silk Road, and so there was all that stuff that happened, and then and then I discovered Ethereum in late 2016, and had some friends that were into the ICO thing, and so from there I started buying and investing in stuff on Ethereum. I bought a lot of Ethereum. I played the whole ICO game, made a lot of theoretical money, lost a lot of theoretical money. Didn't really know what I was getting into. Was not a super sophisticated investor, I wouldn't say. But I really did believe in the idea that smart contracts were going to change the future, and we're going to be the future. I saw the core fundamental value proposition in the idea that like decentralized trustless contracts with no middlemen, right, were really valuable. We were just wrong on the everything in every way needs to be immediately tokenized without products, right? And like that was ICOs were just early. And so my core thesis on Ethereum didn't change. I held a lot of Ethereum for a while, but then I started to sort of hone my thesis around investing in early 2018. And I really sort of concentrated my capital into 3 other holdings outside of Ethereum because I was very bullish on decentralized finance. So, my biggest, I didn't really get the NFT game in 2017 very much. I had like an idea of what it was, of what they were, and I thought they were kind of cool. The idea of internet native intellectual property. But what I knew the most was the finance side of things, and so I sort of took a bet on DeFi. and I basically bet on 3 different protocols. I bet on synthetics, which was Haven actually when I first bet on it. And synthetics is a synthetic asset protocol on Ethereum. Allows you to get exposure to different assets, through sort of like pseudo loans. And it's like a trading exchange, right? The other one was Aave, which at the time was actually Lend. And Aave is now obviously huge, and it was a lending protocol. And I sort of saw those two. I saw those two protocols as sort of core features or core mechanics in like a functioning ecosystem where there's trading that's happening, right? You need lending and borrowing. You need synthetic asset. You need some sort of synthetic asset creation in order to get exposure to a wider breadth of assets that you could potentially want exposure to. I invested in Chainlink, which was sort of like the middleware play in terms of if DeFi is going to have all these assets on it, it's going to need data for these assets. And then the last one I invested in was BZX, which was it was the first on-chain margin protocol. And so it was, you could go long or short with leverage on Ethereum. And so those were sort of like the core 4 protocols that I invested in. I had most of my capital concentrated in Chainlink because I viewed it as it's a middleware layer project, as the other ones were all application layer, right? Where the other ones could theoretically like have a better competitor on Ethereum that won. Chainlink was really the only one that was doing what they were trying to do. And if, for example, Ethereum lost, there was a world where Chainlink could go run all the same sort of data, solutions on a different chain. So those were like the core 4 that I invested in. Most of those, I mean, they all did pretty well. And so that's where I sort of like actually was. And then I just basically held those. I stopped doing the ICO thing. I stopped trying to flip stuff. I really focused on building a thesis, doing some writing and reading, and like not over trading, right? And so I sort of became like, I'm going to be the long-term investor that I really want to be. And and then that's how I got my capital. And then over the last 2 years, sort of maybe a year and a half, have been doing a lot more angel investing, writing checks for smaller checks in seed or pre-seed rounds for different protocols that are building things. Mostly focused on Ethereum, but also focused on Solana. Very, very much I'm a fan of Solana. I love the Solana team. I really like what they're building. And it's kind of weird. Like I get some dirty looks when I say that. Like I'm bullish on both Ethereum and Solana because they're competitors, right? I actually think, and I can talk about this more if you like, but I actually think there's a world where both see serious value, and don't really extract too much value from the other in terms of competition. But yeah, so I wrote a bunch of checks for protocols that are on Solana. I was pretty early in Solana as well. And then I also have gotten involved in a lot of DAOs as well. So a couple DAOs that like did some fundraising I invested in, but I'm also a member of probably 4 or 5 or 6 DAOs now that are building something awesome. I'm involved in those DAOs. And then, I guess 2019 or maybe mid 2020, I really started to get into NFTs. CryptoPunks were like the go-to, right? But I also, and actually it was spurred by the CryptoKitties, gas war explosion, right? When CryptoKitties blew everything up and the gas, like that was when I first started really paying attention to NFTs, because I was like, this is interesting. This is super annoying that it's clogging Ethereum and I can't do all my DeFi transactions or whatever. But it was cool, and I had some friends that really, really were into NFTs, and I have to credit them for like sort of spoon feeding me on some of the theses that I had around them. The idea that there was like blockchain internet native intellectual property is really cool and really futuristic, because if we're envisioning a world where like we aren't depending on, and not that I'm like an anarchist or anything, but if we're envisioning a world around like thesis of crypto where like we're not depending on a government to protect certain types of things, like for example, the monetary, like the thesis we have around DeFi, it makes sense that there's like an internet native social consensus intellectual property, and I think NFTs can absolutely be that. Did the CryptoPunks thing. Really, I'm a big fan of art blocks. Did a lot of the early art blocks mints, and then I collect a lot of different artists from all across the board. I mean, I do some collecting of photography NFTs. Justin Aversano, who did the Twin Flames.
That was a good bet.
Oh yeah, so he's a good friend of mine, and I've owned, yeah, I mean I've owned and sold multiple Twin Flames pieces. I probably shouldn't have sold any of them, but Justin's a great guy, and he likes things to move, and he likes the community to grow, and he wants to get like 100 collectors that have 100 pieces, and so yeah, so I'm a big fan of Justin and the Twin Flames project. Actually, just he's going to Christie's on
Unbelievable.
October 6th. He already did Sotheby's. He's going to go to Christie's. It'll be the first photo NFT in the photography specific section. Like the Sotheby's one was an NFT digital native. This is so the Sotheby's one that he did, it was all NFTs that were auctioned, right? This one is a photography auction exclusively, and his is the only NFT in the lot, and it's Christie's. So I'm very, very
Like as
excited.
a photographer, in other
Yeah.
words, right? So he's just with other photographers, but his happens to be an NFT.
Mm-hmm. Yeah, so it's not like the Sotheby's one was great. I mean, it was historic and it was really, really cool. But it was like, okay, here's the NFT projects, right? We're gonna sell the CryptoPunks, and we're gonna sell the Art Blocks piece, and
Right.
we're gonna sell the
Like an
just
NFT
photography.
auction.
Right, exactly. This is a photography auction, not an NFT auction, and it
Wow.
features an NFT artist, which I think is really cool. So
Yeah.
very excited for Justin, and then from Justin, obviously I got to meet a lot of other photo NFT artists. And so, I own a lot of photography NFTs, and yeah, generative art is amazing. I really like generative art. CryptoPunks are like, you can't go wrong with CryptoPunks, man. They have the it factor.
Yep.
But yeah, so that's so I've collected those, and I spend a lot of time in those spaces. Yeah, and then now I'm working on sort of spinning up a venture capital fund that's going to invest primarily in DeFi and NFTs, infrastructure, and maybe some actual physical NFTs. Yeah, so that's sort of the next vision. But yeah, but still writing angel checks, still advising certain protocols and companies on building different products. That's sort of like the 10-minute version of my story, I guess, if you will.
Absolutely. Well, thanks so much for sharing all that. So, what we're going to talk about today, we're going to talk about fractional NFTs because I think that's a very important story to talk about. It's very like it's what's happening right now, but I don't
Totally.
feel like it's getting the sort of press that it deserves.
It's
I
not.
also wanted to Yeah, I also want to talk about utility of NFTs in gaming. It looks like one of our audience members asked about NFT DeFi functionality, so hopefully we can get to that too because I think you'd be uniquely kind of uh, like a really good person to talk about that basically, right? A couple quick questions first because I think your background's so interesting.
Yeah.
And if you don't want to answer these, that's totally fine. How many CryptoPunks do you have?
I have 5 CryptoPunks.
Have you ever sold any or you just bought those 5?
I have sold some, unfortunately.
Okay, got it.
I've had more before. I've sold some.
Well,
Yes.
that's awesome.
I wish I hadn't sold some, and I wish that I had bought different punks sometimes.
Like
But
ape punks or whatever, zombie
yeah,
punks.
yeah, I had a chance to buy a zombie at one point, and it was like, oh, this is too expensive, and I shouldn't do this, and like I'm already exposed to I'm already overexposed to NFTs. I should stick with the DeFi investing that I know, and yeah, and I definitely regret that decision.
Yeah. And so you're talking about owning punks that you bought in 2020. You're talking about owning Justin Aversano's, meteoric Twin Flames project.
Yeah.
What is the best performing investment you've ever made? Is it one of those two or is it something else?
It depends on how you measure best performing. So there's best performing in terms of like percentage gain, right? And then there's best performing in terms of like overall like actual profit, right? So for example, I may invest zero point 0.5 ether into a Twin Flames piece, and it goes to 100, and that's like a 200x, right? Which is an insane
Yeah.
performance. But I might have invested 50K into a protocol that did 150x, and so the 150x on the 50 grand is going to be uh, you know 20 times greater in terms of like actual
Right.
cash than the Twin Flames piece. Um, but in terms of percentage gain, it's either, oh man, it's either Ave, or it's either a punk or maybe the Twin Flames. But I think it's either Ave or a punk. And I think Aave was the best performing out of the assets that I had that I mentioned, which was Link and Synthetics. But I could be wrong. Aave actually lagged in my portfolio for a long time. So Link and Synthetics both pumped way harder for way earlier than Aave did. Aave like really caught up and made significant gains once it switched from the Lin token to the Aave token, and then just went ballistic. But I think it's probably Aave. I think that's the best performing one. There are still investments like that are out there. Those were like spot investments, right? Like I was a retail investor then. There are still investments that I have out there that are either not liquid or like are they're locked up because they're not vested, or they're equity that I think probably will outperform that. But to date, it'd be one of those things I mentioned.
Yeah, well, you know how to pick them. Everyone, make sure you follow Michael on Twitter. Not that he's just like posting financial advice left and right, but if you want to follow someone that knows how to invest money, Michael's definitely a good person to
You know,
follow.
I
So
I,
let
I, def- I definitely got lucky, man. I definitely got lucky. It was good. It was. I was very fortunate to have a sort of finance and economic bent when I was studying NFT, when I was studying crypto, and like that's the place I focused on and had an understanding of markets. And then when I had an understanding of markets, it was like, okay, if there's going to be a decentralized market, if there's going to be a decentralized financial ecosystem, what are the things they're going to need? They're going to need these things. And it was like, oh, and then I'll just pick these things because they're like some of the only projects that are doing it. And then that was also the time that I stopped selling things, right? Like I was like, I'm just going to hold these for 2 or 3 years at least and see what happens. There's plenty of other coins that I bought that also exploded that I sold, right? I just sold too early, and I didn't have the vision for. So I definitely was very fortunate to sort of have that vision in mind for it. But thank you for the kind words, Pio.
Yeah, a lesson in diamond handing from Michael here. Make sure you hold on to your stuff if you have that conviction in it. So,
Yeah,
moving on now to fractionalization. So, for people that don't know, fractionalization of NFTs has existed. Like, it's not something that came out like last week, right? It's existed at least for the past few months. Beanie's project, like Punk's comic, actually has like fractionalization built in with the way that you stake the comic or you burn the comic. And I know that you probably know that project pretty well, so maybe we can talk about that. And I'm having VGF on later, so that's something definitely that he and I can talk about too. But this fractionalization of NFTs, I feel, is not getting nearly the amount of attention that it deserves. To me, it's the same thing as fractionalization of stocks, which like a whale would not understand. Like, why would I ever buy a piece of a stock? But like a
yeah,
normal retail investor with like a normal income, let's say like 100K or less, or just over 100K, right? That person can't just ape into a $3,700 Amazon share every single week, right?
correct.
And what if they buy that $3,700 share and they literally buy the top right before a minor correction? It's not going to feel good. So when fractionalization of stocks came out, I got really excited. I was able to buy $20 worth of Tesla a day, or
Mhm.
like, 50 to $100 worth of Amazon a week. And then you can build these positions through fractionalization. Well, in NFTs, right, it's very hard to have high conviction in any old NFT project. You're literally buying JPEGs. And some of the hottest projects, Bored Ape Yacht Club, for example, has literally only existed for like 100 days or something like that, like literally 3 months.
Yeah,
And this is one of the hottest projects, right? So to throw whatever the floor is at Bored Ape Yacht Club right now, I think the floor is like 14 ETH or something like that. To just throw that in right now when the market is totally, it's a major unknown. People don't know how the NFT market is going to perform in any given timeline. Obviously, right now it's looking like everything goes up, but I got caught up in the Nifty Gateway bubble bursting in March, and all that stuff capitulated in a major way. I have NFTs that capitulated by 90%, right? So it's very difficult to understand what direction the market's going to go in, but it's a lot easier to have extremely high conviction in those mega blue chip projects like
yes.
CryptoPunks that you own. And you bought into CryptoPunks when they were affordable. I'm assuming the most you spent on a punk was USD equivalent, like maybe 5 grand, 10 grand. Did you
I,
spend
I
more than
actually
that?
did. I actually did buy a punk later. I bought. Well, I did a lot of swapping and like trading.
Mm.
So I did buy. I think the most expensive punk I bought was like 15 or 16 or 17 Ethereum. I think that was the most expensive, and I honestly can't remember what price Ether was at. Then I think it was like maybe two or three, $2,500 or something. So that was the most I ever spent on a punk. But I also swapped a punk for a Meebit when the whole Meebit thing happened. And so that was like the most recent acquisition I had of a punk. Um, But yeah, it's funny you mentioned the Nifty Gateway sort of bubble. I was very I know a lot of people that got really burned on the Nifty Gateway stuff popping. I was on the Nifty Gateway stuff, but thankfully most of my capital was in non-Nifty Gateway projects, and really the only Nifty Gateway projects that I bought were projects that I really liked. So I bought a couple Beeple pieces that I really liked, but I didn't buy them even close to the top. And so like I think I'm either at break even or close to maybe a little bit above where I bought the Beeple pieces. And then the only other things I bought were collectors I really like. So I bought one from an entire collection of an artist named Rafiq Anadol, who does these
Yep.
beautiful three dimensional machine hallucination pieces. And so I have his whole collection. But like I was okay paying whatever I paid for those, and I'm not ever going to sell them. I don't even know if they're trading for anything. Like I don't know if there's a market for them right now. But I love those pieces, and so I didn't really get that burned on Nifty Gateway, which was nice. But going back to fractional, or go ahead, Pio.
Yeah, no, I was just gonna say, yeah, Rafiq Anadol is definitely a great bet, and his work has appreciated. Beeple, obviously, you're not going to go wrong with that. So you were very, smart in what you invested in. I definitely have some good picks from Nifty Gateway, but I have some bad picks to go along with it. So I don't even know what the value of the portfolio is. But back to the fractionalization, right? Now I can buy a fraction of
Yes.
this zombie punk, and I
Yeah.
know, I was talking about this on the spaces that people kind of get a little bit weird about the fractional shares thing of anything. I think that people want to own a whole thing and they don't understand, like, for example, with stocks, once you buy $50 of Tesla, it's basically the same thing as having a whole share, because whatever appreciation or depreciation Tesla has from there, you have exposure to. Like
Right.
mathematically, it's the same thing. There's no difference. And now you can buy like Berkshire Hathaway stock. It's all just the same thing at this point, right? And so with fractionalization of NFTs, now I can dump money into an NFT project that I have that high conviction in, the same conviction I have, say, in Tesla stock, a zombie punk, right? And so now if zombie punks or just punks in general correct, I can get excited because I can continue to build a position in
Totally.
that NFT, with that reduced price, right? It's basically on sale. If my NFT of, whatever, like if I bought like a random other NFT, like my lizard, my little profile picture lizard, if that corrects by like 99%, I'm not going to be like super happy about it. Not that I'm financially dependent about on it, but I don't have the same conviction in a lizard NFT that I
Absolutely.
have in a CryptoPunk. So I think it's interesting that people haven't really like jumped on this. I think it shows how much people are in NFTs for fun and they love that rush, that almost like Vegas level gambling rush of being able to 10x, 50x, 100x, which happens all
Totally.
the time. And so I'm wondering what you think about fractionalization, where we're at now, where we're going to go, and the impact that it has on the space.
Yeah, so this is, I mean, there's, yeah, like I can't even, it's impossible to overstate how complex and big of an issue this is, right? So it's gonna take a little bit, but we'll work through this in a way that I hope is like makes logical sense. So I'm very excited about Fractional. I just want to say that up front. I love the team. I love Andy. I love Dees. They're both brilliant. They're awesome guys. They're just quality humans. Andy's a brilliant dev. One of the current problems that I'm seeing in the NFT space is that there is a very clear and strong lack of high quality smart contract developer power and brain power in the space. Compared to DeFi, the devs that are in the NFT game are just, I mean, it's laughable. And all of the best NFT devs that are currently in the space, including Andy, including guys like Richard, they all came from DeFi, right? They came from places like Maker or Uniswap or wherever, where they built out these complex protocols. Most of the NFT devs, they can do like your standard 10K like random profile picture minting project, and that's about it. And that's about as complex as they get. I'm very excited to see what's going to happen as more and more smart developers come into the NFT space that build these types of tools that we have in Fractional. And I just can't, I can't wait. I'm so bullish on it. But that's one thing to understand is that right now the NFT space is very immature from a financial instrument perspective. Right now, we're very much in a sort of there's some projects that have very clearly latched on that are very clearly going to be long-term winners, have very clear and articulatable value propositions and theses. CryptoPunks, curated art blocks pieces, Bored Ape Yacht Club, probably. Like, those are some of the blue chips of NFTs that, like, they're here to stay. But those make up like 0.1% of all the NFT projects that are in the space, right? And there's other stuff that's out there that's great, but that's not quite blue chip status. So part of the problem is, like, we have what you said, which is like lots of people that want to come into the NFT space, play the lottery, flip some NFTs, make some Ethereum, and that's sort of like, and those people feel like they missed the boat on the blue chips, right? Where it's
Right.
like, I can't afford to spend $100,000 on a CryptoPunk, or $80,000 on a Bored Ape, or $1 million freaking dollars, or $3 million on a zombie, or 500 grand on a Fidenza or Twin Flames piece, right? Like, those are like the pieces that everyone wants and is building up to, but they still want to be a part of the game. And so, we're seeing all these other different projects pop up that are building these own little communities. Well, one thing that we're seeing that's very interesting is we're starting to see sort of the trader, that's TRADER, trader, crypto trader, crypto Twitter people jump into the NFT space now. They feel like they missed the boat. They're seeing all these people making, tens of thousands of percentage gains, and they don't know what they're doing. They're not sophisticated, and I don't mean this in an insulting way. They're fantastic traders. They aren't sophisticated NFT traders, but they want to jump in. They want to make money, and so now, now they're aping into all these projects. We've seen this with the Pudgy Penguins project, right? Where, like, all the crypto traders have made the Pudgy Penguins project their own. They all have capital, and they all have their own set of followers and user base that are all buying into the project, which is part of the reason why the project has done so well. So that's sort of one of the sort of catalysts. And I'm trying to think about where I was going with this. Oh yeah, so with Fractional in particular, there's sort of two elements of Fractional that I think are important to highlight. There's cultural impact of Fractional, the sort of artistic ownership, and then there's financial applications of Fractional. I'm very excited about both of them. The cultural one is much more controversial, and people may disagree with me on. There is no replacement for owning an NFT outright. I can just tell you this right now. Like, there's going to be a large gap between the people like Gary Vee or Kevin Rose that own zombies outright versus people that own 0.01% of a zombie fund, right?
Of course.
Like, they're not the same. And so that's not to say that, like, you owning part of a zombie is bad. It just is to say that, like, the existence of Fractional does not undermine full ownership, right? And this is why, like,
Definitely.
Fractional has buyouts, where if you want to pay the premium, you can buy it out and own it, right? So just like, let's establish that here. Like, owning something outright is not the same as owning a fraction of it. That's okay. It's still really freaking cool to own a fraction of something. Like, it's really cool to say, and for example, like, I missed the boat on X copy one of ones. Okay, really, really pissed about that. I had so many times that I was ready to go buy an X copy one of one when they were 10, 20, 50, Ethereum or whatever, and I just didn't do it. Thinking I'll wait a little bit, I'll wait to sell a punk or something, and I never happened. Well, when my buddy Anonymous X, he bought Five Eyes, which is an X copy one of one. He listed it on Fractional. It was one of the first pieces, maybe the first piece on Fractional. I went and bought a bunch of 5i tokens. So now I own like 5% or something of an X copy one of one, which is cool. Now listen, I'm not going to go around like hanging it on my wall. I'm not going to go around saying I own the X copy one of one. It's not the same as me owning an X copy one of one. But it is cool when, like, I'm telling people about the NFT collection that I have. When they ask me, well, do you have any X copy? It's like, well, not really, but I do own 5% of one. And here's like the tokens that I have. Here's where I bought it. I bought it on Fractional. That's really cool. So thinking about this structurally, it's not the same as owning. It's not the same as owning the full one of one piece. Very, very clear. There's a certain element of prestige and satisfaction about owning the full thing, right? However, it does allow people to get exposure to projects they never could afford before. And then thirdly, it allows people that wouldn't ever be able to have buy-in to a particular project or that project's culture to have some level of buy-in to that project and that project's culture, right? If there's, for example, 10,000 CryptoPunks, only 10,000 people can ever own punks. And it's honestly a lot less than that, because there's probably 2,000, 2,500 punks that are gone forever, right? So if you do that, it's like 7,500. And the devs own, several hundred or whatever, like 300, 400, 500. So that's like 7,000 left. And then there's probably 10 or 15 wallets that own another 1 to 200 as well. So it's really like there's 5,000 people that could theoretically own CryptoPunks. A lot of the people that have them now aren't going to sell multiple. So how are we going to get more people invested in the punk culture? The way to do that is through Fractional, where you can now have 10,000 people owning one part of a zombie, and now you've tripled your collector base and the number of people that have bought into and can be a part of that culture and community, right? And now it's not the same as somebody that owns the full one, but it allows people to get the buy-in. It allows people to participate in the community culture, and ultimately, I think that's a good thing for the growth of those cultures and communities. There's a risk in having too few pieces of art out there in the world. In that, if your collector base loves it too much that they hoard it, it will actually end up being stagnant and not growing, right? Now, other people might come in and appreciate it, but they still won't have the same buy-in. Fractional allows the functional collector base to expand drastically. I think that's huge. There are definitely people that are a little pissy about Fractional because it's like, well, I don't want people to own a percentage, or it's just not the same thing as owning the full thing. And like, I totally feel those sentiments. They're totally right. It's not the same. But if somebody wants to sell their, a percentage of a piece that they own and expand the collector base, totally for it. Totally all for it. That's the sort of cultural side of things. And we could dive a lot deeper into that if we wanted to. I don't claim to be as much of an expert on that. There definitely are people that are more in touch with sort of art culture world than I am that could elaborate and expound. The finance side is very, very interesting to me, though. Fractional.
Yeah.
Yeah, go ahead.
I was just gonna say, you're absolutely right that I don't think anybody thinks that when they buy a fractional share, or if they do, they're definitely wrong. When they buy a fractional share, that they're owning it, or they could make it their profile picture or
Yeah.
something like that. They can put it on their wall. To me, this is pure investment play, right? Because otherwise, why would I want to own a piece of something? Like, I want to own a piece of something here to get exposure, just like the same thing as if it were a stock or something. And because I have higher conviction in this, that's why I'm doing this. I think it's very interesting what you said about like expanding how many people have exposure to these assets. I
Yeah.
think that it's a great point to bring up. In the traditional art world, the most prolific artists often have the highest value, which is counterintuitive to traditional like economic
Yes.
supply and demand concepts. And the reason is because collectors, like the people that collect Jackson Pollock pieces, are all whales. There's no non-whales that collect Jackson Pollock. If you collect Jackson Pollock, then you're in a position to spend, double digit millions on
Yeah.
one painting, right? So you're a whale. So those collectors want a prolific artist so that they can buy more, and there's more liquidity, there's more availability
Yeah.
of Jackson Pollock pieces, and then they could say, I have 25 Pollocks, right? Whereas I think it was Van Gogh is the example I heard, when I was kind of researching this, where Van Gogh is actually relatively scarce in terms of his work. Obviously, he's Van Gogh and he's incredibly
Yeah.
important and his work's incredibly valuable and it's in museums and blah, blah, blah. But at the same time, from like a whale collector's perspective, they're not going to spend as much on Van Gogh because they won't be able to actually get access to as much quantity of Van Gogh pieces. They'll buy one for sure if it's the right price, but they're not going to bend over backwards. Whereas with Jackson Pollock, they can get that high volume and they're like, yeah, let's do it. And they pay that super premium for one piece. So it's kind of flipped on its head.
Yeah, there's sort of and part of it is the part of it depends on who's doing the collecting, right? And the people that collect Pollock paintings, they definitely have what I would call a very collector's mindset in terms of they like collecting sets and they like collecting, groups of things, right? These are the same type of people. This is why I like baseball cards or, signed baseball gloves or Pokemon cards or whiskey bottles or, or Yeezy shoes, right? Like these are all things that people collect because there's sets and there's collections. And the idea is like, you want to own as much of it as you can. You want to get the whole the whole set, whatever it is, right? And so, yeah, you're 100% right. And the people that are like collecting, they'd much rather have 10,000 CryptoPunks that they can own 100 of than 100 punks that they can only own one of. And so, sort of figuring out what the magic number is there is it's difficult and it's interesting. And that's why like Fractional I think works really well for somebody like Xcopy. Yeah. So I'll push back on one thing you said, but I fundamentally agree with it. I think there is an element of fractional that isn't about investing. Like I think there is some. I think predominantly the use case for fractional is going to be financial, as is going to be NFTs as financial assets, and that's what I'll get to in the second part in a second. But
Yep.
I do think there is sort of this like I do think there is sort of this idea that like people want to own a percentage of something for the sake of just being on for the ride culturally. Like if you don't have a punk and you really want to own some, you can pay zero point 0.2 ether and go get a hoodie, a piece of a hoodie punk. And like that's really cool. Or a piece of a Fidenza, or a piece of an X copy, or a piece of a Twin Flames, or whatever it is, right? And so I think there actually is a lot of people, at least currently, that are participating in fractional not for financial gain, but so that they can support artists, so that they can have some buy into the community, so that they can say, yeah, I don't have enough capital to afford $100,000 punk, but I do have enough capital to afford a small sliver and a small fraction. I think fractional is going to trend more towards financialization of assets, right? I think fractional is going to be predominantly used for people that want exposure to assets they can't afford an entire piece of. But I do think that there's always going to be an element of fractional that allows people to participate in networks and communities that they wouldn't otherwise be able to afford.
Absolutely. Yeah. I was definitely very binary about it. And I think that was a much more nuanced, explanation of it. I think you're right. I was literally like, you're an idiot if you're thinking that you own, a fractional share of a zombie punk or something. But no,
No,
I think
no, no.
that was a very eloquent way and nuanced way of describing it. So, can you
Nuance
talk
is
to me
nuance is my middle name, man. That's all about the nuance. But yeah, but
so
hey,
can you
I'd love to talk about the financialization, like the DeFi aspect of this. Yeah,
absolutely.
so there's a couple things that fractional does, and fractional does things for both buyer and seller on a for both buyer and seller on a financial benefit basis. First, let's talk about what it does for the seller, because this is very, very interesting. Let's say I have this Fidenza right here, Fidenza number 527. Okay, and this is a really nice one. It's really rare. It's a black and white. It's an all black and white Fidenza. There's not many of those, and it's just, I mean, it's a spiral as well. Black and white spiral, one of the rarest Fidenzas for sure, no question. And that's very interesting. Now, what they have right now for the implied valuation is $1.3 million. Now, I don't know if that's I don't know, it would be difficult for me to perfectly articulate what this is worth. It could be worth a lot more than 1.3 million, but I can tell you right now, if it were to go get listed on OpenSea for 1.3 million, it probably would not sell. Probably. If it was listed for 500,000, it probably would sell. But even then, it would be like close to not selling, right? Here's what's happening though. The owner of this Fidenza gets to maintain 80-90% ownership of this Fidenza, and will allow this person to get liquidity from the Fidenza by selling 20% of the tokens while still retaining a huge majority ownership, and will get a higher price for those tokens than what is market. So they could functionally, if let's say they're selling it for 3 or 4x what the market price is. I don't know what a comparable Fidenza is going for exactly right now. I'd have to go look. But let's say it's comparable as 500 grand or whatever, and that might be low. If they're getting 3x, 300% markup by fractionalizing and selling 20% of it, because people are willing to pay a premium to own a small part of this because there's only like 10, then he's able to basically sell 30% of his ownership to get 100% of what he would sell it for on the floor if he were going to go sell it on the market right now. And he's able to get better, faster liquidity because he doesn't have to find one buyer willing to pay 1.5 million. He can find 100 small buyers that want to pay a small percentage. So the seller, what he's done now is the seller still owns most of this. He owns 70-80% or whatever the ownership is. He's gotten almost as much liquidity as he would if he sold it at whatever the floor price was, and he still retains ownership. And if he wants to, he can sell more tokens down the line at a future price as the thing appreciates. So what you mentioned earlier about dollar cost averaging into an NFT position, fractional actually allows you to dollar cost average out of positions as well. Because right now the implied valuation is 1.37 million. Well, let's say Fidenzas go on a huge run, which is going to happen. Like this Fidenza is going to be worth 10 million someday or whatever. If those tokens start trading at a higher premium because more people want them, the valuation goes up. he can raise the buyout price as high as he wants, and he can sell 10% more tokens now at the $2 million valuation. When he probably first started selling it, maybe it started as like a $800,000 valuation. Those tokens have now gone up. All the buyers of that token, they're now 2x in profit, and he can now sell the next tranche of tokens, whatever the next 10% is, at $2 million. And he can now slowly dollar cost average his way out of the Fidenza and still own 20, 30, 40, 50% of it. That's just, I mean, that's fucking brilliant. Like the idea that I can have this piece, I don't have to sell the entire piece. I don't have to find one buyer willing to pay this. This is actually happening, Marcus. Like this is real. This is not hypothesis. This is happening. You can go to fractional.art and go look at this right now. He can dollar cost average out of his Fidenza and get much better value for what he would pay to hold. You know, then he gets faster liquidity, and he gets a small premium as well. And he can also raise the price up as it goes up. So like if he sells 20% now and then like Fidenzas explode and they go to $10 million, it's okay because he still has 80% that he can sell at the $10 million valuation. And so he got the instant liquidity. Maybe he reinvested it into another Fidenza. I don't know. But he can sell the other tokens later if he wants. It's absolutely brilliant. That's on the seller side. I think that's so exciting.
And I want to hear about the buyer side from your perspective too. One question is, what risk does he take on in doing this?
I mean, so there's always smart contract risk, right? Like there's always risk that like, the smart contracts that are being used get hacked. But there's risks in owning an NFT for smart contract risk or listing something on OpenSea. Like there's always smart contract risk. I don't have a ton of worry about fractional art at all. I mean, from a smart contract perspective, like really don't. They're very simple contracts. They have an amazing dev team. So there's smart contract risk. There's also risk that like the market tanks, and maybe the tokens tank or whatever. But and so maybe then as he tries to dollar cost average out of his position up, his tokens become worth less. But that risk is pretty marginal because if that happens, he already sold basically the top for 20%. And now it's just as if he owns the rest of the Fidenza at market price. So
Right.
there's not really a huge risk for him. Now there is risk that let's say his token holders get burned because they all bought really high, and the people that own the fractional tokens of this particular Fidenza, they lose 80% or whatever. They could have a bad taste in their mouth and tell all their friends not to come buy this, and maybe he wouldn't have as good liquidity. Obviously, we're very, very early in fractional. This hasn't happened yet because all of the NFTs have exploded since fractional was released. So we haven't really seen how the market dynamics will be played out if NFTs that are on fractional like plummet in value. But I don't see massive risk for him personally. Maybe maybe the buyout gets lowered to a point that he doesn't want it to. Because the holders vote on it or whatever, and maybe he sells it at the bottom for something that was less than he wanted to. So that's sort of one risk. But other than that, like I don't see a ton of risks by fractionalizing. And I'm not the best person to speak to that. Maybe Andy could speak better to that. But I don't see a ton of risk for him in this situation.
If you kind of look at it the same as like with cryptocurrency, right? It almost seems like the risks aren't really that much more to just the inherent risk that you have in keeping your NFT on an exchange.
Yeah, exactly.
It doesn't really get talked about that much in NFTs because I think keeping it on the exchange is kind of half the point, because then you get to show it off, and your OpenSea profile or your Nifty Gateway profile, is badass, and there's a Fidenza sitting in there and everyone can kind of see it. But like if you applied the sort of Bitcoin principles to NFTs, any valuable NFT you have should be in cold storage, like 100%.
Oh yeah, absolutely. Even if it's listed on OpenSea for sale, right? Like it shouldn't be in a MetaMask wallet. It should be on a hardware wallet. It should be in cold storage, no question. But yeah, I mean, you're totally right. Like we haven't seen exactly what happens yet when in this scenario, but like I don't see using fractional as much more risky than I don't see it as being more risky than anything else. And yes, in NFT games, you're right. The secondary risk is liquidity on the DEX. But we're talking about the seller's risk right now. There is risk for the buyers in that if there's not enough liquidity for the piece, maybe they only sold 20% and it was like $100,000 worth or $200,000 worth. That's not a lot of liquidity. for somebody that wants to drop 100 grand, like they could sink all the liquidity and get wrecked on their buy or sell. So
Yeah.
yes, the liquidity is the biggest risk right now, but it's also very, very early. I think the liquidity stuff is going to get sorted as fractional gets bigger. And so we can talk about the buy side really quick. From the buyer side, like outside of the cultural benefit of like owning a piece of a black and white spiral Fidenza, which is just amazing, right? Because this is going to be an icon. This piece right here, and in all Fidenzas, honestly, this is like the future of art. Like these are going to be the Van Gogh in 100 years, in my view. Like the Fidenzas are they're the pinnacle of generative art. Yeah. So anyway, back to the buyer side, right? You could buy a token. You could, as you mentioned, PO, dollar cost average into a token where if you, let's say you want to put in 0.1 ether every day, you can do that and buy 0.1 ether. Now the token might go up or down, right, when you buy it, and that's the point of dollar cost averaging, as opposed to taking a large position from the outset. But yeah, you can do that. The biggest risk right now is going to be liquidity for the token. There needs to be people that are providing liquidity. Thankfully, there's enough market incentives right now for that it's very, very profitable for people to provide liquidity because they get massive swap fees. Like they get really big fees because of how low liquidity is. But yeah, there is a risk that, let's say you dollar cost average and you do it for 100 days, and eventually you have like 10 Ethereum that you have in this project. And let's say the whole project only has 50 ETH worth of tokens. If you try to market sell all of that, you might eat like 20 or 30% slippage. So yes, that's true. The exiting of the position right now is not quite as liquid. That will be something that gets solved and that gets sorted. Here's the other thing that I'm very, very excited about NFTs though, or specifically fractional. Fractionalization allows for NFTs to be perfectly compatible with DeFi applications in that all of the tokens are programmable and composable. So fractional, like they're now on Uniswap, right? They could be used to earn yield on different protocols. They can be used as collateral for different, once Aave adds fractional Fidenza tokens or fractional Zombie Punk tokens, you can buy these tokens. You can go use them as collateral on a lending exchange, pay out a loan against your Fidenza tokens. That's amazing. The other thing it's going to do is it's going to enable large players, and I documented the Three Arrows Capital buying spree very, very closely. I sort of broke that news on Twitter, and then I did all the research with a couple other anons as well. And like Three Arrows Capital is unique, right? Not every hedge fund or VC firm is going to go market buy a bunch of art blocks and punks. But that's a bit of a risk that they're absorbing because of the liquidity. But Fractional will allow bigger players to come in and buy things without having to worry about the exiting of liquidity, because Fractional is going to make NFTs a lot more liquid. If you're a big hedge fund, you can go buy a 300 Ethereum piece, like a Fidenza or whatever, and or an Eternal Pump or a Zombie Punk or whatever it is, and you can go put it on Fractional immediately sell 30% at a 3x, 2x, 3x premium, recoup most of the capital you put into it, still have 70% exposure, all to the upside. That's amazing. That is how, in my view, hedge funds and VCs are going to get into the game. They're going to buy pieces, they're going to fractionalize them, then they're going to find ways to gamify those fractional tokens, and that's how they're going to make a ton of money on NFT pieces. They'll also use them in DeFi applications, right? So they'll also go use their punks as collateral and take out loans to go take long or short positions elsewhere. That will absolutely happen as well. But that's where I see the liquidity problem with NFTs is the barrier for big money players to get into the game, and Fractional, at least in part and maybe in whole, solves it. So yeah, this is the biggest reason I'm bullish on Fractional. We saw what happened when $10-15 million of Three Arrows Capital money was injected in the NFT ecosystem. Everything art blocks tripled overnight.
Yeah.
Punk's floor absolutely went ballistic. I mean, it was insane. And that was nothing for them. They have $10 billion in assets under management, and they spent 10 million. That's like 1% or less than 1% of their capital, right? So that's a sneeze for them. I mean, it's still a lot of money. But my point is, relative to the amount of institutional capital that exists that wants a piece of what is clearly a movement that's here to stay in NFTs and in this culture, if that sneeze is what causes all of this price explosion and price discovery, I can't wait till we get 100 million and $1 billion in capital injected from lots of other hedge funds. And they're going to not buy, they're not going to go buy the shitty pieces. They're going to go buy the premium pieces. Which is why I think like buying fractional tokens of some of this stuff is actually not a bad play most of the time, even if you're paying a premium.
Yeah, I mean that's so interesting that you say that, and it really is a drop in the bucket. There's not a lot of capital being injected into NFTs compared to what, I think me, you, and a lot of other people expect there to be in the next year, 2 years, 5 years.
No
To
question.
think about that, that's crazy. Like a $7 million, punk floor sweep from last week, or whenever it was 2 weeks ago, had such massive market impact. $7 million is nothing to a hedge fund, literally nothing.
Yeah,
And
no,
so just
the one guy 0x650D,
yeah.
he market bought with like $5.5 million. He paid mining DAO, 5 Ether to reorder the transaction so that they all got bought in one sweep, which was absolutely brilliant. I
Yep.
mean, we could talk about that whole transaction for a while. But what he did was he single-handedly moved the floor from like 29 Ether to like 38 Ether with 5 million bucks. I mean, that's ridiculous. That's
Nuts. There's only 10,000 of these things, and like you
yes,
said, so many of them are out of circulation, and they're like the without a doubt number one NFT. Like Jay-Z's
correct.
Twitter avatar is a CryptoPunk right now,
Yeah.
right? So it's like before when you sort of start to think like that, it's like, well, wait a minute. If there's never going to be more of these things, these are like the priceless, Van Goghs and Jackson Pollocks, and maybe Fidenza, like you said, also gets that same kind of rank. I mean, it's well on its way, right? Like
Oh
the
yeah, it
Fidenza
it, it
pieces,
totally is.
yeah, like 100%. So it's wild. I loved what you said about, how VCs and, these DeFi investors are going to be able to utilize the NFTs. Like, we say utility so much. I need someone to give me a better word, because that's the number one word that I think makes sense, right?
I
Because the
think
utility,
yeah. I think I like okay, so at a fundamental level, I like composability and programmability and liquidity. So like
yeah,
composability slash programmability are sort of the same, and then liquidity, that's the key to unlocking utility, right? Because once you have those things, any single financial application that you want NFTs to be plugged into can be plugged into. Synthetic asset exposure, loan collateralization. How about margin trading? How about going long with 100 times leverage on a Punk's token that's perfectly tracked to the floor Punk price, right? Imagine being able to go. Imagine being able to take a 50x leverage position on the Punk floor price when they were at 25 Ether, and they shot up to 50. Like that's crazy. You could, and that's coming. Like that's absolutely going to happen. And I'm seeing NFT games. You're 100% right about the new gold standard, where there will be multiple LPs with multiple art pieces, but also the idea that a 10K avatar project can keep 1,000 of them, do a vault, and reward community members with the tokens associated with those. Fractionalize 1,000 pieces, and now they have a huge treasury. This is one thing that's missing currently in NFT projects is they have the NFT projects have a treasury from the mints that they made, but maybe the minting is not a lot of money. If they could have if they could keep exposure to their asset, to their project, by keeping or minting 1,000 for themselves, fractionalizing them, then as the project grows, now their treasury directly grows with the value of their NFTs. So it's not like a Bored Apes Yacht Club situation where Bored Apes, the Bored Apes Yacht Club guys, they maybe made, I don't know, 100, 200, 300 Ethereum on the initial sale. Maybe it was more than that. Maybe it was 1,000 or whatever. But like they lost out on tons of the upside of the growth, right? Because now the Bored Ape floor is like 15, 16, 20 or whatever it is. If you had if they kept 1,000 and fractionalized them as tokens, now they get direct upside with the growth as well. So totally agree with you on that. And that'll be used for a lot of sort of game theory mechanics, incentive mechanisms. But yes, I mean, back to what you were saying, like composability and programmability are keywords there. Liquidity is another keyword there. Once you have those two things, that's where utility comes from. That's where NFTs can be used in every single DeFi application you can think of. Synthetic assets, margin, perpetual futures, lending and borrowing, collateralization, all of it is there. And like, yeah, that's going to be really, really exciting.
It's just amazing. It's like all the traditional financial kind of functions are being
Yes.
streamlined because of the integration with this great technology. Anybody that, is sleeping on just the power of DeFi slash, blockchain slash crypto, I feel like that doesn't have a leg to stand on once you start to understand a lot of this stuff. It
They're never
really
gonna
is a
make it they're never gonna make it, right? Like, no.
straight up.
Another one would be yield farming. Imagine a project launches a token and it's like a NFT community token or whatever, and they allocate 10% of their token to CryptoPunks holders. And the way that you earn these token is by staking either your CryptoPunk or some derivative of a CryptoPunk, like a wrapped punk or a punk's token, onto their yield farming protocol, and then that's how you earn tokens. Like, that's going to happen. That's going to be a way for you to bootstrap a community of punk holders as well. Yeah, no, I mean, I'm so excited. NFT games. You asked about price feeds. How are prices defined? That's something that's going to be worked on. That happens once you have fractional, which allows you to get liquidity, and then it'll probably be something like a Uniswap TWAP price oracle based on sort of what's being what the market is in terms of being traded. But it'll probably be initially floor price, maybe -1. You're totally right. What will be really interesting is when we can come up with price mechanisms in the market that will evaluate NFT projects based not on their floor price, but based on how rare the attributes are, what the floor price is for the attribute. That will be very interesting. That's still a ways out. But we'll get there.
We're getting deep there. Yeah. And I mean, I think a lot of the stuff that we're talking about too, when it comes to some of this fractionalization and, giving people exposure, it's almost like index fund investing with dividends, right? Like
Mhm.
whoever's the most savvy and figures out the right ways to approach this, the right angles to take is going to be, they're going to make so much money. It's just incredible to think about. So I think we just really dove really deep into fractionalization. I appreciate that, Michael. For utility and NFT gaming, right? So,
Yeah.
like, I think NFT gaming, everyone kind of agrees it's the next frontier, but I don't think that many people have like sort of 10 toes down figuring out exactly what the next steps are for NFT gaming. We know Axie Infinity is out there.
Yeah.
You were talking on that space about the issues that are, inherent with Axie Infinity, right? So I'm wondering, what do you think is going to be the next step for NFT gaming, and how do people that are trading projects right now on OpenSea, how are they going to get involved with this NFT gaming? Like, how can they benefit from it?
Yeah, and let me just we could clarify my position here. Like, I really like Axie a lot. I think Axie is amazing. I think Axie is the pioneer, the test case, the model for how to build a video game that's crypto native, right? In a way that has like proper token economic incentives built in, right? Like, they've built a true tokenomic virtuous cycle where where the token, we're not based on like emissions of a token, right? It would be really easy to do a play to earn game, and that's the model that they're using, by the way, is play to earn, where you play the game in order to earn some token or capital, right? It's really easy for anyone to release a play to earn game with a token that's very inflationary, right? Where they just have a billion of the token, and every 10 days they emit 1% of it or whatever, right? Ad infinitum. That's really easy. But what happens there with the inflation, like if the token is so inflationary, right, the token price is going to go down over time and never up. Axie's built a model where, because of the NFTs that they have and the relationship of the NFTs to the token, it's not the inflation of the token is totally offset by the value adds and the token economics elsewhere, which is brilliant. And it's also why their token has exploded in price, right? Because the more people are playing the game, the better it is for the token in the ecosystem, which is crazy. That's not what you would expect of a very basic, typical play to earn model. Now, Axie's done a lot of great things. Axie also, Axie is not the most complex game. Okay, it's pretty simple as a video game in terms of most of the way that you earn capital is not through being strategic or having some brilliant strategy or being smart or intelligent or being good at some sort of gameplay. Most of the capital is earned through time. This isn't a criticism per se of Axie, but what it does mean is that, like, eventually there's a sort of race to the bottom for the player base where there will be an equilibrium hit where the people that are willing to work for the cheapest will be the core player base. And one thing that I love about Axie that is just incredible is Axie has sort of created a true career path for people in countries outside of the United States, outside of highly developed countries that are very, very well off, where capital is not a problem. It's created a true revenue stream for people that live in much poorer countries to be able to play a video game and earn way more than a ton of the much higher than the average annual salary of somebody that has a really, really nice, well-paying job in that economy. That is incredible. I think that makes me very, very excited for the future. That's a big part of the reason why I really am bullish on the space, and I've said this for a long time. It's like one of the reasons I invest. I think crypto is a true democratic, equalizing economic force and opportunity. And Axie is a perfect example of that, where now we know that their player base is in all these different countries, and somebody that can make millions flipping NFTs, they probably don't need to play Axie to earn X dollars an hour or whatever. But the ability for somebody to feed their family in a third world country by playing a video game for 4 hours, that's fucking cool. Now,
yeah,
that's amazing. Now, the reason I have my hesitation around Axie is because I think that it's the economic conversion with Axie is basically who will do the labor for cheapest. And labor means playing the video game. There will be some people that play the video game for the prestige of collecting the NFTs just inside the game, sort of like how people would play RuneScape. Even if they weren't making money on it, they played the game because they want to get all the items, right? And that's a key incentive, motivating force for a lot of people. But if that's not your motivating force, if your motivating force is to make money, eventually the people that are playing the game will be the people that are in the worst socioeconomic situation. And so there will be sort of an equilibrium reached where as the player base expands and there's less capital to go around in terms of how much money can be made per day, eventually have a scenario where the people that are willing in Venezuela, for example, to work for $1 a day will be playing the game. And that's fine. I don't think it's a bad thing. It is just the nature of the sort of incentives around how they built the game and prioritizing economic incentive over play incentive. There's still a lot more people that play Fortnite and play Call of Duty than play Axie, and none of those people get paid. So I'm very excited for the video game that has a play to earn model that also has enough merit and backbone behind the game itself to truly sustain a 1 billion person player base across the world for 10 years. That has me so excited. I'm excited about Treeverse, which is Loopify's MMORPG game that's crypto native, and they sold some of their NFT land plots. I'm excited about Treeverse. There's a couple other games that I'm excited about. I really love Axie. I think Axie's here to stay. I think they're if you were an investor in Axie, congratulations, you did it. You went from a 3% seed round or something to $60 or $70. You absolutely killed it in less than a year. And I think Axie is truly an example of how crypto can be a democratizing, equalizing economic force. And I'm very, very excited and bullish on that. I just think that there's going to be other games that are better pure video games, if that makes any sense, that also use the play to earn model that are going to explode. I don't think Axie's it. I don't think it's we've had Axie and now innovation is done. I think they proved that the play to earn model can work, and they had brilliant enough tokenomics design and video game NFT design to show that they can build a sustainable model where people can earn money consistently without a totally stupid inflationary measure. That's amazing. The next step is now let's build a crypto native game that has true staying power on its own as a video game, and let's make it more complex. Axie's simple. I say that now. We can say it's simple now. Obviously, there was a ton of brilliant vision and strategy that went into its creation, but now that we've hit the benchmark of here's the baseline for what we can do and it can be successful, let's multiply that complexity by 10 or by 100, and then let's see what happens there.
Yeah, I mean, play to earn is just so fascinating. I think that phrase play to earn, we're going to hear it on CNBC, we're going to hear it talked about on Bloomberg. Like play to earn is going to be a really really big impact on just the financial world in general, because I think you're going to start to see like people playing video games for a living, and I'm not talking about the folks that are like esports professionals that are at the kind of top of the heap. I mean just like people that are pretty good at a game that has a lot of demand, probably the type of game that you're talking about that's actually going to be fun but also has a real monetization path. You're going to see these people making more than accountants. You're going to see them making more than teachers. It's just
Oh yeah,
going to be like a major career path, which is unbelievable. And talk about a changing world. I think that it's so interesting that you talk about Axie as the first, but obviously there's going to be a lot of development, a lot of innovation from here. The other thing is that my friend that's a big gamer, he's now getting into NFTs, and the first observation that he made was that NFTs fill this void in video games, and RuneScape is a perfect example. Although people were selling items in RuneScape like on eBay and things like that. And so that's something to think about, but NFTs actually fill this gap where you work so hard on this character, you work so
yes,
hard to obtain these items, and now you actually have like a way to monetize,
yeah.
but also an official way to do it that's minted on a blockchain and is 100% above board, so to speak.
Yeah, you're not trusting the game developers that they're not going to like ban your account and you're going to lose the thousands of hours that you put into the game, right? Like if you collect items and you collect skins in Counter Strike Go, right? You don't own you own those connected to your account, but guess what? The developers at any time they can ban your account, they can take your skins, they
Right.
can discontinue items. That's a problem because that
Yep.
only caps the I mean, that caps the amount of true investment that somebody can really put into something, right? Like, and that would be, I mean, yeah, the idea that the ownership of the assets in game extend outside of the game and are not subject to the whims of a game developer is absolutely monumental. I mean, I can't even begin to overstate how important that is. Um, and that's honestly like the power of decentralization, right? And like decentralized ownership. And yeah, I'm very extremely excited about that. Yeah, the idea that like you can have a career by playing a video game without being a top 0.001% of a streamer on Twitch is amazing. Like, like there's people that have careers playing video games because they're in the 0.001% of a competitive player or they're 0.001% of like a famous streamer, right? And that's
Yeah.
totally different than just sitting at home playing a video game for 5 hours and being able to feed your family. That's awesome. I mean, like, you can hate crypto, you can hate NFTs, you can think they're a scam, you can think they're a bubble. You cannot deny the real impact and effect that's having on real people in real difficult like economic situations right now. And that's amazing. That makes me bullish on life. It makes me bullish on humanity. It makes me bullish on the future. And yeah, I'm ready to iterate on it. Like let's do that. Let's build the next one so that we can have this expanded times 1,000.
Absolutely, man. The bet on crypto slash like, Bitcoin or whatever, like, but crypto as a whole is the bet on humanity. The bet
Yeah,
on gold is like the bet on disaster, right? That's what's always talked about. So I think you hit the nail on the head. Michael, thanks so much for coming on, man. We'll have to do this again in the future. You're a wealth of information. And I think, Zaifi just said in the chat that there's a lot of really important stuff in here. So I just appreciate you sharing your thoughts. And I think everyone in the audience appreciates it too. So, really appreciate having you on, man.
yeah, of course. I really am grateful to you for having me on as a guest, and it was great to connect over Twitter Spaces. It's funny how you meet people in crypto. Happy to come on and chat about anything, anytime. I mean, I feel like we could spend, I feel like we could spend 10 hours talking and not run out of, and stay within the NFT gaming, DeFi sort of realm. There's so much happening. There's so much to talk about. So yeah, happy to come back on anytime. Thank you so much, Pio, for hosting, and say hi to Video Game Freak for me, and good luck with him. Like we didn't even touch on Punk's comics or Pixel Vault. I'll let him talk about it, but I'm a big fan of. They're doing some really good stuff with the utility that they're building, with their token economic and game theory incentive mechanisms behind the burning versus staking of the comics, and then Mint Pass, man. Mint Pass is just absolutely brilliant and genius. So yeah, truly fantastic. Thank you so much for having me on the show.
My pleasure, man. Everyone, make sure you follow Michael on Twitter. That's at Michael Tant3. He talks, typically every Monday in Beanie Spaces. There's hundreds of people listening, and Michael comes on and definitely drops knowledge bombs on people. He's always, tweeting out really interesting stuff. So make sure you follow him. And Michael, I hope to see you on more podcasts, man. I think you're built for it.
Yeah, thank you. I just went on. I just went on another one this last week. I have one scheduled for tomorrow. And yeah, I also do pop in. Deez is a good friend of mine, so I pop into his Twitter Spaces sometimes. But man, that guy is a grinder. He's an absolute hustler. He's on Spaces. So he's on Spaces every hour. Like it is absolutely insane the amount of time that he spends. I know there's people in the world that will give like people that will not give people the credit they deserve for blowing up or going viral, right? Yeah, rants by Michael Tant. That's exactly right. There's people that will not give influencers, if you want to use that term, right, credit for going viral. Deez is an absolute animal of a hustler, and
Yeah.
he has spent 12, 15 hours a day working with people, being on the Twitter Spaces. And so he deserves every ounce of good thing that's coming to him in my view. So yeah, so I sometimes hop into his Spaces as well. He's doing great stuff. Pio, this is a fantastic stream. I got to watch the stream more often, and yeah, I'm sure I'll come back on, and I also hope to see you more on Spaces as well.
Absolutely, man. I'll have to watch this back to try to digest everything you talked about, but
me too, man. Me too.
thanks for watching, everyone, and make sure you follow Michael. See you, Michael.
Thanks so much, Pio. You have a good rest of your day. Take care, man.